Hey everyone, this is Rangadad. Not financial advice, just the way I'm looking at the market. Figured I'd go live for this. Just hang on a sec. You guys probably can't hear my speaker, but
continue to be confident that with an appropriate recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%.
Bitcoin did just close within its Bollinger Band.
Reduce our securities holdings. I'll have more to say about monetary policy after
typically after that it will head towards the mid band of the Bollingers, which is about 75,800ish.
Has continued to expand at a solid pace. GDP rose at an annual rate.
Bit of volatility in the market in the third quarter,
about the same pace as in the second quarter. Growth of consumer spending.
In fact, we got a big order here.
And investment in equipment and intangibles.
Big order here. It could sweep both.
In contrast, activity
during
in the
housing
sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In the labor market, conditions remain solid. Payroll job gains have slowed from earlier in the year, averaging 104,000 per month over the past 3 months. This figure would have been somewhat higher were it not for the effects of labor strikes and hurricanes on employment in October. Regarding the hurricanes, let me extend our sympathies to all the families, businesses, and communities who have been harmed by these devastating storms. The unemployment rate is notably higher than it was a year ago, but it has edged down over the past 3 months and remains low at 4.1% in October.
Yeah, right.
Nominal wage growth has eased over the past year, and the jobs-to-workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of significant inflationary pressures.
Ooh.
Inflation has eased significantly over the past 2 years. Total PCE prices rose 2.1% over the 12 months ending in September, excluding the volatile food and energy categories. Core PCE prices rose 2.7%. Overall, inflation has moved much closer to our 2% longer run goal, but core inflation remains somewhat elevated.
NASDAQ closes outside this.
Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a 1/4 percentage point to 4.5% to 4.75%. This further recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. We are not on any preset course. We will continue to make our decisions meeting by meeting.
Hang on.
As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains strong and inflation is not sustainably moving toward 2%, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly, or inflation were to fall more quickly than anticipated, we can move more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities,
on the
families, and
charts.
businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price
Bitcoin's
stability
just
goals.
retesting the
Thank
Bollinger
you. I look
Bands.
forward to our discussion.
Yeah, the market didn't
Thank you.
really go
Given
either way on that
the
one.
expectation that the election outcome will produce policies that would meaningfully impact the U.S. economy next year, how is the committee taking these proposals into account for upcoming decisions, including potentially the next one in December? And can you give us any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies with the next administration?
Sure. So let me say that in the near term, the election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and
You'd
to what
think
extent
after
these
100 years of
policies
doing
would
it, they'd
matter
have
for the
some
achievement
idea,
of
wouldn't you?
all variables, maximum employment and price stability. We don't guess, we don't speculate, and we don't assume. Now, just in principle, it's possible that any administration's policies or policies put in place by Congress could have economic effects that over time that would matter for our pursuit of our dual mandate goals.
So I think
So we
summary out of all
countless
that
other
is
factors, forecasts of those
they are
economic
dropping
effects would be included in our models of the
25
economy and would be
basis
taken
points.
into account through that channel.
Nick.
thought for a second there he said they were actually increasing it. But,
Nick Timrose from the Wall Street Journal. Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you noted how higher borrowing costs, if they were sustained, could weigh on economic activity. Given that you've said you believe policy is restrictive and the Fed is now dialing back that restriction,
Doesn't
are the
look like
growth risks
Bitcoin's gonna
presented by higher
break
US
back
Treasury yields
out of the
today
Bollingers.
any different from those you identified 1 year ago when inflation was still meaningfully
just
above
going
your target?
to
So I would just say this: we've watched the run up.
Just gonna wait till the end of this
It's
candle, and then
nowhere near
I'll,
where it was, of course, a year ago. I guess the long.
I'll
run
get
rates
rid of
are
him
well
and
below
do
that
the rest of the
level.
analysis.
So we're watching that. Things have been moving around, and we'll see where they settle. I think it's too early to really say where they settle. Ultimately, I'm sure we've all read these decompositions of what, and I certainly have, but it's not really our job to provide our specific decomposition. I will say, though, that it appears that the moves are not principally about higher inflation expectations. They're really
Yeah, Bitcoin's
about
coming
sense
down a
of
little.
likelihood of stronger growth and perhaps less in the way of downside risks. So that's what they're about. We do take financial conditions into account if they're persistent and if they're material. Then we'll certainly take them into account.
Effectively
in our policy. But,
retested
I would
this
say we're not
inside
at
Bollinger
that
Band
stage
here.
right now. We're
Typically a
just,
close
we're watching.
within that.
Again,
We'll
these
see
things
that retest
don't
and
really
then
have
pull back
mainly
to the
do
mid band.
with Fed policy, but to do with other factors in the economy.
If I could follow up.
Typically,
is the
not
September
always.
SEP, are those rate projections still valid? Do they still seem relevant given where we are now?
It's you get halfway through the cycle between.
Ooh, I didn't like that
the
comment.
last set and the next set. I wouldn't want to comment one way or the other. People are. Let's talk about the data we've gotten since the last meeting. So, in the main, the economic activity data have been stronger than expected. The NIPA revision was stronger. Certainly, the September employment report was stronger. The October report not stronger. Retail sales stronger. So overall, though, I think you take away a sense of some of the downside risks to economic activity having been diminished with the NIPA revisions in particular. And so overall feeling good about economic activity. So I think we would factor that in. At the same time, we got one inflation report, which it wasn't terrible, but it was a little higher than expected. So I think really the question is December, and by December we'll have more data. I guess one more employment report, two more inflation reports, and lots of other data, and we'll make a decision as we get to December.
Decent pullback across the board now. Still got 3 minutes on this candle
Thanks
there.
for taking our questions, Chair Powell. When it comes to December, what will you be looking at specifically as you try to make that decision? And then as of the Fed's economic projections in September, you had written down 4 quarter-point interest rate cuts in 2025. Do you still think that those are likely? Is that sort of the baseline outlook at this point, or has that shifted? And if it shifted at all, can you give a little bit of detail as to why?
I can't. We don't fill out an SEP, and I can't characterize one that wasn't filled out today. So I can't really speak for kind of exactly where the committee is. I will just say for December, we're going to be, again, at every meeting, we're going to be looking at the incoming data and how that affects the outlook. As you know, we're in the process of recalibrating from a fairly restrictive level at 5.33%. After today's move, we're down 75 basis points. And we're asking ourselves, is that where we need to be? That we're trying to steer between the risk of moving too quickly and perhaps undermining our progress on inflation, or moving too slowly and allowing the labor market to weaken too much. We're trying to be on a middle path.
Target for Bitcoin is somewhere around this level to start with, but
progress on inflation. We think that's where we are. But that's the question we're going to be asking in September and in other meetings.
I don't turn him off. I think the market's decided which way they're going now.
We don't fill out an SEP at this meeting.
Yeah, totally appreciate that. I guess when it comes to your own thinking, do you think that a full percentage point of rate cuts in 2025 is a reasonable outlook?
Again, we're going to wait and see how things.
He's not going to answer that.
Come in December. I mean.
All right. So let's get into the analysis. Short term. Oh, fuck, my Nero trade's going all right. I entered a short on Nero. Average buy-in was about 2.39. Nero CTO pair anyway. It's up 200 and something percent at the moment. Actually, I'll show you this. So, because I have what I've done for the guys in Origin in particular, I've swapped over into an account that had unified trading set up on Bybit. Money that I sort of had left from all the testing and trialing and stuff that I was doing, which is about 460 odd bucks or something, and put it into the unified account so that I could convert it to Bitcoin and use that as collateral for the trades. So I can actually still trade hedge if I want, but at least I got the capital sitting there in Bitcoin. That's an interesting move back up. Don't think that'll hold, but might just close some of these out while I'm talking. Nah. What I'll do is I'll just take profit in here. And Nero, I'll put. Actually, I'm going to close that, I think. Yeah, I'll take 200%. That'll do me. Did have one on Mudeng as well, but got in a bit early on that, I think. Mudeng's probably got a bit more to go. The others probably do as well, but I'll close them out for now. That's so I can do this properly. But yeah, as you can see, this is going pretty well. Gonna do this account, I've kind of found my rhythm in terms of how I want to trade, given all the work I got to do through the day and stuff, and the time that I can put into it. It's actually more of a kind of a swing trade, but kind of scalpy. Till I can get my bot up and running properly. I'm going to be looking for big lows, big highs, and trading them accordingly. Shorts, I'm going to be very careful with. I mean, this may play out more to the downside, but shorts are really tricky in a bull market. I'm only really going to take them when I know, one, I've got a clear stop loss and a clear target. And obviously, I had that one last night, stopped out. Need that clear target. If I don't have the clear target, I'm not going to take it. And even then, I'm going to be conservative on where I take profit on the shorts. So that's how I'm going to play this bull. If it is confirmed to be a bull, but I'm also going to utilize the alts a bit. So some of these things just move so fast. Like if I see a good setup on Bitcoin, I'm going to put a little bit on Bitcoin, but I'm probably going to utilize the alts more. Like as you can see, I was loading up on the short in here, took a little bit of profit off just to cover costs. And when it got down in here, I set my stop loss above that candle there. Sorry, this candle here. And just monitor it. So the target here was the mid band. I got in a little earlier than I probably should have there, but I could see the rollover happening in Bitcoin as well. So especially around an FOMC meeting, I probably shouldn't have taken that trade, but I was reasonably confident on it. So got a standing buy order in here just because there was lots of liquidity at that point for Bitcoin. I don't really want to miss that level if it gets there, because I think it would be a good bounce level. So I'm going to do key level stuff and yeah, just look for sort of bottoms for swing trades and basically utilizing the dark pool activity as well. Now that we've got IBIT, it actually makes it a bit easier to do dark pool liquidity type analysis. Why isn't CoinAnk working? That's a pain in the ass. But yeah, I'm finding over the last month or so, really watching CoinAnk closely and dark pool activity, you get a pretty good idea of the longer term trades. And watching the shorter term time frame price action, you can kind of see when that's going to play out. Looks like this has actually tried to load. Maybe. What the fuck? I'll leave that over here for the time being. While it loads up. Doesn't seem to want to load properly though. Wow, CoinAnk really doesn't like me, does it? Oh, there we go. That's better. All right. So a little bit of continuation here, which is a good sign for Bitcoin. I did think it might pull back a little bit further during the day just because of the amount of upside we had in that candle and the gap on IBIT. So, sorry, I'll just bring that back on to when it loads up. So IBIT does actually have a gap. It doesn't have to close straight away, but you know, kind of thought it might try for it anyway. But that had to be some profit taking. I'd be very surprised if that was someone buying in at the top. On the seventh largest order of that particular ticker, which was around $91 million worth of order size. So yeah, bit of profit taking on the way up. You kind of expect that to be occurring. What I will have a quick look at is ETF flows. So IBIT's actually had a bit of an outflow, nothing compared to what came in, but definitely I think there's some profit taking happening on the way up here. Relative to what's come in, not super concerned. FBTC's actually had a big jump in incoming. That's a little strange. I kind of pay attention more to the BlackRock one just because BlackRock have so much of a say in the global economy. Like they got their fingers in everything, and I would expect them to be advising people when to take out, when to put in, stuff like that. So liquidation map. Obviously, we've got on the daily now, on the single day, quite a bit of an imbalance there. So potential for downside, but when you're running these sort of numbers and Bitcoin's on a move up, tough to take a short. 30-day. Yeah, that's a massive difference, isn't it? Jesus. When the when the economy crashes, it's going to be fucking bloodbath. Just across the board, not necessarily just Bitcoin, but holy shit, there's going to be so much liquidity to the downside, it just gets wiped out. Interesting, we've got a fair bit of liquidity coming into the charts in the last day. In terms of long liquidity, not a lot of short liquidity. So we could swipe this still. We could keep pushing up. Like, I'm not like we could leave this stuff here for ages. Realistically, it's not something I'm expecting to get taken anytime soon. But if we do have sort of a confirmed downside trend, which we don't yet, then they're your targets when we do start coming down. So 74,200, 73,300, pretty good targets. To the upside, obviously, I think 78K is going to happen relatively soon. Probably CoinAnk's got a better gauge on that. And again, CoinAnk's sort of agreeing with that 74,200 level. Lots of liquidations down to that level. Some pretty decent orders in there as well, but potentially a bit further into the 73s as well. A lot of long orders in that range. To the upside, probably 77,500-ish, 77,400 is a pretty good level. Would sweep a lot of short orders. And to be honest with you, there's probably more short orders than long orders at the moment. More people taking profit than looking to buy in. So we could actually push higher. So I'm glad I closed those shorts. I might look to open some longs with sort of short time frame take profit levels. potentially $1,000 move from here just to sweep these orders. I think there wasn't anything major that dumped the market from the FOMC, so upside is probably more likely. There is a bit of profit taking. Open interest is dropping a little bit. In fact, it's kind of flattening out here too. So today could be a bit of a pullback day, but hard to take that short. As I said, it's gonna have to be a pretty clear signal. A clear signal would, you'd probably have to be breaking, for a start, breaking below that 20 moving average there, 67,100. And even then, it's going to be bouncy and quite volatile on the way down, just like it was here yesterday. So yeah, even like bounces off the 50 EMA on the 15-minute are likely around those levels. But a closure below the 50 and a retest of that 50 is probably going to see you with a little bit more downside into that 74 or potentially even lower. If we're breaking below that 200 EMA on the 15-minute, then probably a little bit scarier, but yeah, I'd be using that as a target to the downside anyway, especially when it coincides with a lot of pretty decent liquidation level. All right, so covered that. Not really pushing to major highs yet. Still 4 hours left in this candle. Volume is obviously down on yesterday, so take that as you will. It's not exactly making a decision. It's just you'd probably call it a distribution day for Bitcoin, to be honest. A little bit of profit taking and maybe building some positions for the next leg up. Time will tell. Smaller time frame price action. I am a little bit surprised that NASDAQ and SPY have both sort of continued their run. When I say a little bit surprised, I just kind of expected them to recover a bit more of this first, even if it was in the after hours. But the after hours was quite strong still. Futures market was pretty good. S&P 500, it's so close to that 6,000 mark. It's actually broken back above this trend line that we've had on there for a while. I'd kind of be surprised if that holds that trend line. If it does, there's going to be a pretty big run, I would think, on S&P 500. Let's have a look, see if there's a trend line coming in through the highs. That's not a bad target line there. I don't think it comes in there, but it definitely comes in to this little high here. Probably find it extends through to some of these levels as well. Yeah. Fairly strong trend line. So a short-term target could be up around the 6,100 mark for S&P 500. I would expect some pullbacks after that. Don't think that's out of the question. So another trend line we've got sitting in there, which was from ages ago. Don't think that's going to be of huge significance for the time being, but do think that this one here is probably, it's actually pretty well forms a parallel channel. Should do this using the parallel channel tool, but That's a pretty good level through there as well. Just because it's hit it a couple of times and bounced off, never confirmed below that. That one obviously did. So short-term target on S&P is somewhere around 6,100. Don't see why it would pull back from here before doing that. You could just get a couple of sideways days now that we've had a lot of the big news come out, but realistically, it's looking bullish. Don't know what these are doing here. Them. And then pullbacks from there, pullbacks into this level here, which would coincide with this little top as well, I think. So over the next few months, I'd expect sort of the low to be around 58.70. But even still, you're going to get a little bit of a wedge pattern happening there. That's probably not going to be super strong though. Anyway, so given that we've kind of got some upside targets on S&P 500, futures has gone past 6,000. Then yeah, I think generally upwards and to the right is probably going to be the case for a little while yet. I am concerned about how quickly it made these moves yesterday with the election. Equal weight, yeah, that's still going strong. So there's strong support for a continuation here. XLI's recovered that vector a little bit, obviously leaving behind a massive gap though. So equal weight. So equal weight S&P 500 hasn't had as big a day, but still holding that high. Equal weight Qs has had a big day. That's suggesting pretty good support for the market. Typically, when tech is running across the board, it will drag the S&P 500 up as well. Regional banks, bit of an inside day there after a massive move, so it's taking a bit of a break. So home construction and home builders kind of still eking their way up a little bit. Kind of want to see a decent bounce here. Realistically, you want to see them going with the market, but I think that's kind of, this is showing probably some underlying issues in the economy at the moment. I know I was reading an article last night on the Australian home, what was it? Home construction. The government's got a target of like 240,000 homes a year, and they're going to miss that target by, I think they're probably going to get 40% of that. And there's some real underlying issues around interest rates and availability of resources and construction costs and all that sort of stuff. So DJI Gold's pulling back a little. That suggests there's some underlying issues, but until we really settle down and find a groove after that election, not too concerned about this. I think it might make a higher low here from that point. We're getting into oversold territory, but as you can see, it can go on a run. But again, this is a pretty good indicator of a pullback when you reach those peaks and pull back. We haven't, I mean, we did see a little bit of a pullback. We had that sideways and then a little bit down at the end. So don't think this is telling us anything massively untoward is going on at the moment. DJI Gold pulled back a little as well, but we're back into this range. So I think that's suggesting there is a bit of strength in the economy. VIX is still low. Skew yesterday did actually have a bit of a pullback. So the fact that we haven't gone too far today on the S&P and stuff, I think is supported by this move in skew yesterday to the downside. Interesting to see what the read is today after the close. Or is that today's? No, it's yesterday's. So yeah, be interesting to see that one. Suspect it might be back to the upside, but there's a lot of positive gamma going on in the options market as well. So whilst ever you're in positive gamma in the options, it tends to drive the market up. Chinese market had a bit of an iffy day yesterday, but recovered a bit today. So that'll be interesting just to see if that can sort of confirm this breakout, really. You want to see another positive day today. If we get another positive day today, then I would expect it to go up a bit. But overall, Japan market has recovered this vector candle, retested that 13 EMA. Needs to move up though, I think. I think that's the 13. Yeah, I've got that as the 13 at the moment. So, yeah, good recovery of the vectors. No real significant vectors to the downside except for this one, but I'd expect that to be sort of a target if the overall market crashes. Global market crash. TLT finding some support. So high yield junk is going with the market, which is good. We want to see that if we're bullish. This bond indicator is supporting the market as well. This was probably the best indicator that there was some support for a move to the upside. Copper's had freaking wild ride over the last 2 days. Full recovery basically of this vector candle. Bounce off that 200. It's swept the liquidity that's in this vector candle here. Like, we pointed that out yesterday that was a pretty strong level, that 200 EMA, but holy shit, didn't expect that move. Yeah, that's wild. 4.6% to the upside after a 4.85 down day. So copper's, yeah, that's bizarre. Seems to be following the Chinese market more than it is sort of the US market at the moment. Gold, I'd call that probably maybe another upside day just to pick up this 13 EMA here, but it's pretty well recovered that vector candle. So gold with the market going the way it is potentially going to pull back. It's just what the Dixie's doing. So if the Dixie continues to pull back, and what did it hit? It did hit our 105 target yesterday. Shit. Wow. So we've recovered that vector candle there. Next target, if it does go on a run to the upside, is probably around the 106 level. But that's a pretty solid level, good pullback. We need Dixie to kind of keep pulling back to suggest that that the market's going to keep going up. Now, you got the carry trade sort of happening again at the moment. It could shift markets quite quickly. Just be aware of that. But I'm expecting markets to settle down a little bit over the next week or so. Probably just grind up, hopefully. Good pullback in the dollar would be handy, though, just to underpin all that. So Aussie dollars had a good bounce. Left a wick behind again, but yeah, just swept the liquidity that was sitting under that level, I'd say. Some big moves on this market, though. Japanese yen getting a bit of a bounce. Yeah. Get a little bit concerned in that people that are doing the carry trade might have been taking some profits and converting it back into Japanese yen. But we'll see. Not a strong read by any means. I mean, shit, euro. Wow. 2% move on Forex markets. Massive. Good level for a bounce. Would have been freaking people out at this level, though, with that structure there. Yeah, markets are going to be bouncy for a little bit, I think. Brazilian real had a great bounce off that support level. Looks like it wants to continue a bit. Might struggle to get through this region. There's a bit of resistance here. Yeah, that's a pretty good level for a pullback, actually. Good resistance. Great bit pound. Same sort of shit. So global liquidity is ticking up still. We got a new read on that. No. Percentage of stocks above 50-day moving average has bounced significantly yesterday. Kind of suspected that might have been the case. I'd probably expect that that's going to sit somewhere around that same level. We want to see that driving a bit higher though too. Because the Mag 7's definitely on a run at the moment. Tesla's still pushing higher. Nvidia's pushing higher. Google's pushing higher. Although Google may find some resistance around this level. That's one to watch. If that pushes through, then I'd expect the overall market to keep going. Even ARK is doing all right. So this is a sign of strength in small caps, this fund. The fact that we've broken back into this channel and into the mid-band of this channel, that's suggesting there is a fair bit of strength here yet. Okay, so generally, this is all pointing to upwards and to the right. Apple's reclaimed this downward trend line here. Wouldn't call it strongest trend line in the world, but it is closing above the 50 EMA as well. So, and looks like it's above the 13 EMA at the moment. I'll see where that closes, but either two closes above this level or a pullback and then a break to the upside would suggest, again, Apple's strong and the overall economy is strong. I'm not going to worry about. Amazon's ripping the upside. Even after a bit of volatility around earnings, it's pushing up. I guess off the back of the assumption that the economy is going to be okay. Some underlying issues with special overnight funding rates. Interest rate spreads are not looking healthy. Long term, there is some structural issues in the market, but the stock market doesn't care about that at the moment. So hopefully those issues are sort of 6 months plus out. And the Fed reducing the interest rates will help with that. Actually, I just want to have a look at the bonds. Sorry, the yields. The yields are pulling back off that 200 EMA. And this one's just pulling back off a previous high. Kind of want these to keep coming down a little bit, or at least flattening off. I think they're at fairly reasonable levels at the moment. That's what they say. They're at about 4.5%. short-term interest rates. So the fact that we're just below that on the 2-year, that's not a bad spot for it to have a bit of sideways movement. And that sort of sideways movement, I think, would make the market relatively happy. Skipped over oil too. So oil's confirmed above that 50 now. So target would be gap close here, which is sitting at the 200. So 75.50 is a definite target for US oil. Definite target, not a guaranteed level. So Ethereum's come to the party too. As we said, we wanted to see that another close inside this band. The fact that it's closed above the 200 would be a good level for a pullback, but you've got the value area low sitting here as well. So we could hit the value area low, which is just below 3,000 before we hit this. But we've also recovered this daily vector candle here. So could be a little choppy, same as Bitcoin, but pullbacks into that 200 EMA wouldn't go astray. Even back down, like your 100 EMA here has actually been, is that the 100? Yeah, I think that's 100. Hang on. Yeah. 100 EMA has been actually, no, I read that wrong. No, just this level in here, I think, for pullbacks, it's a fair way from where we're at now, though. So, and Ethereum's pushing higher. I think Bitcoin is too, isn't it? Yeah, Bitcoin's retesting that recent top again as well. And looks like it's going for it. Look at the shorter time frame. Yeah, so again, doesn't have to hit the mid band of these Bollingers once it closes inside, but that's why I took profits. I just, when you're around big news events like this, he might have said something in the meeting, that in a press conference, that's caused this to pump again. Could just be because the market liked what it's heard overall and it's going back to the upside. This is an interesting move. Let's have a quick look back at, look at where it's heading. Could just be a sweep of this liquidity up into 77. A little bit over 77 for a pullback, or even 77,300. But pretty decent day after a big pullback. What did we say over here? It was, yeah, 77,500. It looks like it's making a run for this liquidity up here. Somewhere between 77 and 77,500, I think, would be a good spot for it to top out for a little bit. Starting to get a little bit of the topping signal in here, but nothing major. So wouldn't really call a top here yet. Could potentially even take a long here, but I think I'll leave this one. All right. That's about it anyway. Sol has smashed through that first target. Next target is 202. It could hit that today, at which point probably expect a little bit of a pullback, but with the all-time high so close to that as well, yeah, again, pullbacks are just buying opportunities at this point in time. As I said at the start, if I'm taking a short, it's got clear targets, clear stop losses, and it's going to be something where I can monitor it. I'm not busy with other work. So. Brett Brett's an interesting one. It's one of the bigger meme coins on base chain. It hasn't really moved yet. Could be one to watch for the bull. A few of these ones are getting, geez, they're getting sold off, aren't they? Carve. Heights is not having a great time of it. I would expect this to recover though. Yeah, that's interesting. That's still coming down. Could be a short-lived move on Bitcoin, but most things have had a little bit of a pullback from that high. Have a look at Litecoin. So Litecoin's moving similarly to Bitcoin. Got Link. Yeah, they're all moving okay. I would like to have seen some of these break out of recent highs though. It's kind of concerning. Someone just transferred 13,000 ETH to Coinbase. Nearly $40 million worth. That's interesting. XRP, even XRP is getting some love. Only a little bit though. Gala's going to be one that I'll probably take a spot position in reasonably soon. It's a pretty good base for it. It is gaming related. DO. This one here, I probably will take a position in as well. Anyway, for the time being, I mean, a pullback, yeah, halfway through a candle isn't necessarily mean it's going to go the other way, but it would have been a good little buy probably. Fair bit of action going on. Anyway, this has been a long one because of that FOMC meeting, but I think that's the target on this little move here is low 77k. If this candle closes above these wicks anyway. Otherwise, it could just be a short-term liquidity hunt. I think it will though. Seems like it would make sense. Gonna say that and it'll pull back. Anyway, that'll do for the time being.